Hello everyone, I'm Dr. Stock. This video is for entertainment purposes only. Today, I want to bring to you some of the dividend stocks that I'm interested in, some of the ones that I think that you should also be interested in. I have 4 different ones for you. I have an REIT, healthcare, consumer discretionary, and I also have one of them that's financial. I'll make my case for each one of those. I hope that you enjoy it. Let's get ready to rock. Welcome back. So my Patreon, things are heating up over there. I got members joining. It's starting to look pretty good. I have more features coming every week. I have a dividend portfolio that I'll be releasing coming up in February. So I hope that you can come over, check it out, be part of that. I already have my growth portfolio available over there. So you can see the stocks that I'm into right now. That's currently up about 30% from when I created it. So that growth portfolio is available. The dividend portfolio is coming in February. That will also be available for you to take a look at, see what you think about it. I'm presenting some of the stocks here. Some of them I'm looking at, some of them I'm already invested in. Again, over at the Patreon, the link is down in the description. Come and join us. We have a private Discord. We can talk stocks whenever you want to. Any stocks that you're interested in, you can mention it, you can talk to the community that's over there. I'm in there all the time, discussing, interacting, and I'd love to see you there. Again, that link for the Patreon and the private Discord is down in the description. Next, Webull. If you sign up and deposit $100, you get 4 free stocks. I get 2 free stocks for the referral, so it does help support this channel. I got some new equipment on the way, new camera, new microphone. It's exciting stuff. That link for the referral is also down in the description. Finally, subscribe, hit the notification bell, hit the like button, share it with your friends. Let's get to the stocks. The first stock that I have for you is Medical Properties Trust, ticker symbol MPW, and this one is an REIT. And for this one, what they do is they deal in medical real estate, that they buy and then lease medical properties throughout the United States and also throughout other parts of the world. You can see that they took the pandemic pretty hard, but they've gone up close to double what they bottomed out at. And if they do double their low price in the height of the pandemic, they'll be right back up to where they left off back in February of last year. The analysts right now are saying that this could go anywhere from $22 to $24, at least what's official available through Webull. But then I've also read other articles where analysts are putting this at $26 to $27. This being a dividend stock, the appealing thing here is that they pay nearly 5% as an annual dividend yield. So that's a very attractive amount. And then also with the growth of the stock on top of that and the fact that they're expected to grow through 2021 compounds the reasons why I believe that MPW is a good dividend stock for your investment. So between their 5 to 10% growth that they're expected and the high dividend yield that they currently have, I think that this is a great stock, a great opportunity for you. The next stock that I would like you to look at is Merck, ticker symbol MRK. And Merck is interesting because you can see right now it's at one of its low points. And recently we've had higher lows in their price, and they peaked back here before the pandemic at $92 a share. They're currently under all of the analysts' estimates, which means that we stand to grow from here. If we take a moment to look at the estimates that Webull reports on, right now they're about $81. So about 5% from where they're at would take us a little under 5% to the low estimate. But if we look at the high estimate that we have up here, that's $20 up from the 80 that they're at. So that's about 25% gain if we were to make that high estimate. Merck is a very large company. It's a proven company, and they also pay a very handsome dividend. So when we look at the dividend for Merck, they have a forward dividend yield of 3.2%. They have a payout ratio of 43%. So they're taking 57% of that money and reinvesting it into their company to keep their growth going, which is something that we definitely want to look at. They have a 5-year growth rate on their dividend of 6.5%. So not only do they pay a nice dividend, they're also a company that stands to continue to grow, and they also reinvest in themselves in order to keep that growth going. The next dividend stock that I would like to offer you is Home Depot, and Home Depot has just been a champion throughout the pandemic. You can see at first they took it pretty rough, dropping down to about $140 a share, and they are up to about twice that As a matter of fact, just over double where they were at their low point, coming out at $284. They still are off this double top high, and you can see this line of resistance that we have across these peaks. So breaking that's going to take a little bit of effort. It has dropped down from that recently, but the housing market is something that's believed to increase and to grow, and that we're expecting to see a lot of new houses in the housing market, which means a lot of new materials coming out of the Home Depot as we continue throughout 2021. If you look at the analyst estimates, we are above the low estimate of 236. There's 35 analysts on this right now, and about half of them say buy, and about almost 23% are saying that it's a strong buy. And if you look at the averages that we have and the high estimates that we have, we are still about $20 below this price right here. And then we're about $70 below that. So we could go anywhere from like 7 to 25% growth in Home Depot over the year of 2021. So Home Depot still stands to show some growth throughout the year. And if we look at the dividend that they pay, Home Depot is looking at a 2.15% forward dividend yield. They have a payout ratio of 50.7%. So they keep about half to reinvest into their company, and then they also pay out half for their dividends. So they're really balancing the amount of growth that they would like to have, and they're also returning some of those profits to their investors. So that's a beautiful thing. So we're in really good shape for Home Depot, and it's a very stable company with really good ratings as far as its dividend safety and the dividend growth that it has. The last company is Goldman Sachs, and Goldman Sachs is on a tear right now with its growth. So it still stands to have growth in its stock price. The analyst ratings on this one right now, we're above the low analyst price, but we're still below that average by almost $40. So when we look at the analyst estimates for Goldman Sachs, if we look at the average and the highs, the lows, we're pretty far above that. We're about 40% beyond that at this point in time. If we end up getting to the average that we have here, that's about a 13-ish% gain from where its stock price currently sits. And if we make up to the high estimate, that's 50% growth from where we're currently at. So the growth is one of the selling points that we have for Goldman Sachs. So when we look at their chart, thinking that we have room to grow from where we're currently at is something that really makes this an appealing dividend stock, because we get the growth from the stock appreciation, but then we also get the dividend payout. The dividend payout, the forward dividend yield, is 1.73%, and they have a payout ratio of 17.40. So while that seems kind of slim, they are dumping a lot of money back in reinvesting for themselves, and they are looking at a 14.42% 5-year growth rate when you're talking about the dividend yield. So the dividend, probably one of the biggest selling points that we have is the dividend safety that comes along with Goldman Sachs. So we have a company that's rock solid, that has really come through strong through the pandemic and is still expected to continue that strength. It's still very bullish. And the dividend safety, so by investing with Goldman Sachs, by putting your money into Goldman Sachs, you have a very, very, very high likelihood that you're going to receive that dividend payment every quarter that comes by. So for the 4 dividend stocks that I have, the first one, MPW, is probably the riskiest of them all, but still seated really well. They came out of the pandemic well, and I think that they're going to have a really impressive 2021. And they also have that nearly 5% annual dividend yield to take advantage of. So they stand to take a 5 to 10% growth on their stock price on top of the high payout that they have for their dividend, making it a really attractive stock to invest in. For healthcare, Merck, rock solid, stands to make a lot of growth, has a very reasonable dividend at right around 3%, and the company stands to go up nearly 25% in their price per share. So I think that's something that's really good between the company from its growth potential and from the dividend payout that it has. The two of them, I think, really work really well together. Home Depot has been a rock star, still expected to grow throughout 2021, and also pays right around a 2% annual dividend yield. So keep an eye on that one. Consider it if you haven't already. I think it would be a nice addition to anybody's portfolio. The last one, Goldman Sachs, because of all the growth that they stand to make, that the analysts are coming out of this in a very bullish way. I don't know if I see the 50% upside that some people are seeing on their stock price, but I can definitely believe it would fall within the range of the 13% to 50% from our average to our high estimates that we have. On top of that, they pay a very stable dividend, even if it is under 2% for the annual dividend yield. I still think it's an attractive offer for that stability, for more of a guaranteed payment that you would have in the dividend safety rating that they bring. So to wrap this up, the Patreon, my growth portfolio is out there. Come on over, check it out. I think that you would like to see the stocks that are in there. The dividend portfolio is the next one to come out. That one's coming out in February. So if you do join us, be on the lookout for that. The link is down in the description. Click it, sign up for it. We have our own private Discord. You can also check that out, and you can talk stocks with the people that are in there. They're a great group of people. They're very active, and they're very excited about the trading that they do. Webull, sign up, deposit your $100, get your 4 free stocks. That link is also down in the description. Subscribe, hit the notification bell, hit the like button, share it with your friends. Remember, this is for entertainment purposes only. Always do your own research and your due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.